We're going to be talking about the problems with GM as a company and why they went bankrupt back in 2009 and how they could have prevented that from happening. So first of all, GM designs, manufactures, retails, and sells automobile parts as well as automobiles through brands like Chevy, Buick, and Cadillac. It's the largest, at one point it was the largest automobile retailer in America. The CEO is Mary Bartra, and the headquarters are in Detroit, Michigan. They went bankrupt in 2009 due to the recession in 2008, as well as a dramatic loss in sales. The 2009 bankruptcy was the largest industrial bankruptcy at the time. It was caused by a dramatic plummet in sales, as well as the recession, and it caused them to get a $50 million government bailout. The stock price fell below $1 from its previous $40 price. It was the lowest since the Great Depression.
GM, as part of our diagnosis, we came to the conclusion that they had also, as part of their issue, very poor asset management, and part of that was they struggled with their brands. So like up there you see different brands that one of them actually is discontinued. Pontiac no longer exists, they were discontinued. And so of the issues that caused these discontinues and the poor sales management included the overpriced vehicles due to varying reasons and just being unable to compete with competitors. And interest-free financing also caused them a lot of issues because you would have customers purchase vehicles that they couldn't afford, and so thus they couldn't actually pay for them, so they'd often end up repossessed and nobody would get any money. And so part of the poor sales management as well is poor brand perception. So when a company is selling vehicles and people don't actually have a positive perception of that brand, then they're going to have no cause or reason to buy from that company. And so as such, their non-stop deals and product quality being lower also drove down sales, because when there's constantly a deal, there's no actual incentive that's going to draw people in. So that marketing was kind of a failure in the aspect of people don't actually see it as a deal because it's constant. There's no actual shift that would make them think that it's a deal. And also the financial wing of GM being a major component of the company would allow a lot of these interest-free loans to be approved without the thought of how are we actually going to get a return on these investments. And so continued is the $50 million federal bailout back in 2009 because of GM's struggles with trimming and struggles with these, again, interest-free loans and not actually being able to make a return on any of their selling or projects or any investments they had made. And so they had to borrow a substantial amount of money to the tune of $50 million from the federal government, and their deficit was insane in that final year before they had the bailout, with their assets being $148 billion and incurring $30.9 billion in losses in that final year. And so continued as part of our diagnosis of poor asset management is, as I previously mentioned, their unwillingness to trim. And so the company struggled with an uncertainty of where do we cut, where do we roll back in order to help save the company. And it was also difficult due to, as we explained and discussed in our paper, the extensive union and benefit contracts they had, which would prevent them from rolling back things. And then also funneling money into projects that were not going to be profitable, like Pontiac Aztec, for example, and other projects, and also being too slow to move past their initial brand, with SUVs being a huge component of their business, and with with rising gas prices, no one was really in the market for a large truck or SUV. They wanted something more fuel efficient, and that's something GM just wasn't providing.
Okay, so for the solution part, the first one that we came up with is that they were focusing too much on the sale of the car than the actual car. So they were advertising the sale a lot, but they weren't actually advertising their cars. And then another solution would be to either sell off or discontinue their unprofitable brands that were Hummer, Saturn, Saab, and Pontiac, and they were actually losing $3,000 for each Saturn car that they made. And then for the next solution would be to make the cars have better fuel efficient. That was a hard time for cars back then as prices were going up. And they also would have profited from maybe putting a foot into the electronic vehicles. And then they also could have benefited from turnaround management because they were going downhill so fast and they didn't do anything with their upper management. So maybe bringing in new people could have helped save them. And they also had really high labor costs, as you can see, it's 50% higher than any other US-based plant. They're also paying their employees really high wages and pensions, and as we see today now that they've cut that back, and that has helped them tremendously.
For our action part, we said GM should keep its products more up to date. They were producing the same car year after year and they weren't making many improvements to it. They should have been trying to improve fuel economy and even dipping their feet into, say, an electric vehicle or something along those lines. For the second part of action, we said to reduce legacy costs and labor costs. They had some terrible contracts over the years. There have been multiple studies on it that show the more contracts they had, the lower their profit margins were. And that just ultimately made them not competitive. As you can see, they were about $3,000 down compared to like Toyota or Honda on just their sedans, which in 2008, that became a big part of the market due to rising gas prices. And then thirdly, we said to advertise products rather than new deals, because as stated before, these interest-free financing deals that they were promoting, they worked in the short term, but the effect wore off long term, and they just really couldn't keep the sales of their cars high enough with that. And with that being said, they just need to scrap that completely, think of something else. And then lastly for action, we said to cut underperforming brands and focus on the more profitable brands. Brands like Saturn and Saab. Saturn was about $3,000 loss per car and Saab was $5,000 loss per car. And as you can see, they dissolved Oldsmobile in 2004, and they should have followed suit with Saturn and Saab just because they were losing so much per car for nearly a decade, and that was unnecessary.
The solution to the problem of poor sales was to better advertise the cars rather than the sales. One way to evaluate better advertisement is to analyze how much traffic it generates to the company website. Analyzing visits before and after the advertisement will allow General Motors to see if the advertisement was effective and what it was supposed to do. The impact of the advertisement on sales must also be evaluated. This is done through a sales analysis. General Motors can set goals for sales before a new car and advertisement hit the market, and then compare the goal sales to actual sales to see how well the car did. After the advertisement drops, they can do the same thing again, see how effective the advertisement was. Another issue was poor asset management, with the solution being to sell dying brands and invest in fuel-efficient cars and trucks which were in high demand at the time. Evaluating the solution is the same as the solution before, with a sales analysis. General Motors would once again have to set goals before the new fuel efficient cars drop, and then compare actual sales to goal sales. Another way to evaluate the solution is through benchmarking. Benchmarking means comparing your company to others. In this case, General Motors would compare the sales of their new fuel efficient cars to the sales of other car companies' fuel efficient cars like Ford or Chrysler. This last solution was turnaround management with the last solution was turnaround management with the evaluation being quite simple. Employee surveys is the best way to properly evaluate new managers. This is done through surveys and meetings about new managers. It must be done anonymous to keep employees honest.
So to conclude, GM was largely its own downfall besides the recession, but it's important to consider that leading up to the recession, it was making a lot of errors that were causing its own struggles. And that's natural with most companies, but this particularly pertains to the management side of things, with corporate management struggling to make and execute proper decisions in order to ensure the longevity of the company and its profitability. And so with GM being such an iconic company, it's awesome to recognize the history of it, but it's also important in these situations to recognize that just because a company has lasted so long doesn't mean it's without its struggles in the present. And so, like we talked about previously in all the other slides, poor asset management and poor sales management plagued the company, and as such caused it to need such an enormous bailout. And as to go with that, it had such an unwillingness to trim the brand when it was struggling, and so naturally it brought about those failures. And so company wastefulness can certainly be considered the largest factor, or one of the largest factors of GM's downfall, and influenced by that was poor management.